Hi, everyone. In today's market update, we are looking at one of the most actively discussed crypto assets in the market right now, Worldcoin, WLD. The token has recently started showing renewed strength after a period of extended weakness, catching the attention of traders and analysts who are watching for a potential trend reversal. Over the past 24 hours alone, WLD has managed to push upward by more than 6%, climbing toward the 63-cent region, which signals that buyers are slowly stepping back into control. What makes this move even more interesting is that it is not happening randomly or in isolation. Instead, it is forming alongside several technical and derivatives-based signals that suggest momentum may be shifting in favor of the bulls. A golden cross formation on the daily chart, rising open interest in derivatives markets, and a wave of short liquidations are all combining to create a situation where volatility is increasing and traders are becoming more aggressive on both sides. With price now approaching a key breakout zone, the big question is whether Worldcoin has enough strength and market participation to continue this recovery and possibly make a run toward the psychological $1 level in the coming days or weeks. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decision. Looking at the broader structure of Worldcoin's recent price action, it becomes clear that the asset has been gradually recovering from its lower accumulation zone around 23 cents. That area marked a significant low where selling pressure started to weaken and buyers began to slowly absorb supply. Since that bottom formation, the market has been building a pattern of higher highs and higher lows, which is typically one of the earliest signs that a downtrend is losing strength and transitioning into a recovery phase. This type of price structure is important because it shows that momentum is not just driven by a single spike, but instead by a consistent shift in market behavior. Each pullback has been slightly higher than the previous one, indicating that sellers are no longer able to push the price back to earlier lows. At the same time, buyers are becoming more confident in stepping in at higher levels, which reinforces the upward trend. As WLD continues to push toward the 60 to 65 cent region, the market is entering a critical decision zone. This is where traders typically evaluate whether the trend has enough strength to continue or whether it will face rejection and revert back into consolidation. At the moment, the price holding above 60 cents is a key sign of strength because it suggests that buyers are defending this zone rather than allowing it to break down again. One of the most important technical developments in Worldcoin's current structure is the formation of a golden cross on the daily timeframe. This happens when a shorter-term moving average crosses above a longer-term moving average, typically the 50-day moving average crossing above the 200-day moving average. This type of crossover is widely watched by traders because it often signals a potential shift from a bearish or neutral trend into a bullish one. While it does not guarantee a sustained rally, it does indicate that momentum is changing direction and that buyers are beginning to dominate longer-term price action. In the case of WLD, this golden cross is particularly significant because it is forming after a prolonged downtrend. When a market has been in decline for an extended period, moving averages tend to slope downward, reflecting negative sentiment and weak demand. However, when price starts recovering and short-term averages begin to rise faster than long-term averages, it suggests that momentum is accelerating to the upside. What makes this setup more compelling is that price is not just crossing moving averages, but also maintaining structure above them. This alignment strengthens the bullish case because it confirms that the market is not only reacting temporarily, but potentially shifting into a more sustained recovery phase. If this momentum continues and WLD manages to hold above key moving averages, the golden cross could act as a foundation for a longer-term trend reversal rather than just a short-term bounce. At the moment, one of the most important support levels for Worldcoin is located near the 60-cent zone. This level has become a psychological and technical support area where buyers are repeatedly stepping in to prevent further downside. Holding this level is essential for maintaining bullish momentum because a breakdown below it could weaken the current structure and lead to renewed selling pressure. On the upside, immediate resistance is forming around 66 cents. This level is crucial because it represents a short-term ceiling where price has previously struggled to break through. If buyers are able to push above this resistance with strong volume and sustained momentum, it would likely confirm a breakout continuation. Beyond 66 cents, the next major target zone sits around 80 cents, which acts as a mid-range resistance area. This level is important because it often serves as a transition point where traders begin to take profits, slowing down momentum temporarily. However, the most significant psychological level remains $1 to $1.02. This is not just a technical target, but also a major psychological barrier that attracts both retail attention and institutional interest. Reaching this level would represent a strong recovery from previous lows, and would likely require sustained buying pressure, along with continued market confidence. Beyond spot price action, derivatives data is playing a major role in shaping the current movement of WLD. One of the most notable trends is the rise in short liquidations. This happens when traders who bet on price declines are forced to close their positions because the market is moving against them. When short positions are liquidated, it creates automatic buy pressure in the market. This is because exchanges must buy back the asset to close those positions, which can accelerate upward movement, especially when liquidation clusters form around key resistance zones. In recent trading sessions, WLD has experienced multiple waves of short liquidations, suggesting that bearish traders have been consistently caught off guard by sudden upward spikes. This type of market behavior is often associated with short squeezes, where rapid price increases force even more liquidations, creating a feedback loop of buying pressure. At the same time, open interest in WLD derivatives has been increasing. Open interest represents the total number of active contracts in the market, and when it rises alongside price, it usually indicates that new money is entering the market rather than existing positions simply closing. This is an important confirmation signal because it shows that traders are not just reacting emotionally, but are actively building new positions in anticipation of further movement. Rising open interest, combined with rising price, typically strengthens the case for continuation rather than exhaustion. However, it is also important to monitor this closely. If open interest begins to decline while price stalls, it could signal that traders are exiting positions and that momentum is weakening. Momentum indicators are also providing additional context to the current market structure. The Relative Strength Index, RSI, is currently holding above the neutral 50 level, which indicates that bullish momentum is active but not yet overextended. This is an important balance because it shows that the market still has room to move higher before reaching overbought conditions. When RSI enters extremely high levels, it often signals that a pullback may be due. However, in this case, RSI remains in a healthy upward slope, suggesting steady buying pressure without excessive speculation. This type of RSI behavior is often seen during early to mid-stage trends, where momentum is building gradually rather than peaking too quickly. It supports the idea that WLD may still have room for continuation if other market conditions remain favorable. If current momentum continues, the bullish scenario for Worldcoin becomes increasingly interesting. The first major test will be whether price can break and hold above the 66-cent resistance zone. A clean breakout above this level would likely trigger additional buying pressure and potentially attract momentum traders. Once this level is cleared, the next logical target sits near 80 cents, where the market may experience some consolidation. If buyers manage to absorb selling pressure at that stage, the path toward $1 to $1.02 becomes increasingly realistic. Reaching the $1 level would represent a major psychological milestone. It would likely bring increased media attention, renewed retail interest, and possibly stronger institutional participation. Markets often react strongly around round numbers, and $1 is a key level that could act as both resistance and a breakout trigger depending on market conditions. For this bullish scenario to remain valid, WLD must continue holding above 60 cents. This level acts as the foundation of the entire recovery structure. A breakdown below it would weaken the setup and delay any potential move toward higher targets. Despite the bullish signals, it is important to consider potential downside risks. If WLD fails to break above 66 cents and instead faces repeated rejection, the market could enter another consolidation phase. In such a scenario, price may drift back toward the 55 to 60 cent range, where buyers would need to defend the structure once again. A failure to hold above 60 cents could open the door for a deeper retracement, potentially invalidating the short-term bullish setup. Additionally, if open interest begins to decline while price remains stagnant, it could indicate that traders are losing conviction. This type of divergence often leads to weakening momentum and potential downside corrections. Another risk comes from overextended short squeezes. While liquidations can fuel upward movement, they can also lead to sharp reversals once forced buying subsides. In the short term, Worldcoin remains in a transitional phase, where the market is deciding whether to confirm a breakout or remain in consolidation. The combination of bullish technical signals, rising derivatives activity, and improving momentum indicators suggests that the path of least resistance may currently be upward. However, confirmation is still required through a clean break above resistance levels. Until that happens, traders are likely to remain cautious and reactive rather than fully committed to a long-term trend. Market sentiment is gradually improving, but it is still sensitive to volatility. This means that sharp movements in either direction remain possible, especially as liquidity builds around key price zones. To sum it all up, Worldcoin is currently showing early but meaningful signs of a potential bullish shift. The price has recovered significantly from its lows, formed higher highs and higher lows, and is now supported by a golden cross on the daily chart. At the same time, rising open interest and repeated short liquidations are adding fuel to the ongoing upward movement, suggesting that market participants are becoming more active and increasingly positioned for volatility. The key level to watch remains 66 cents, as a breakout above this zone could open the door toward 80 cents and eventually the psychological $1 mark. However, failure to hold above 60 cents would weaken the structure and potentially delay further upside progress. Overall, the market is at a critical turning point, where the next move could define whether this recovery evolves into a stronger uptrend or fades back into consolidation. Thanks for watching. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss the next update. See you in the next one.